Alright, so it might interest you also to know that our CPF interest rate structure has actually changed. Okay, so before January 2008, our CPF OA interest rate calculation was actually pegged to the average of the three major local banks' interest based on the 80-20 basket. So what is this 80-20 basket? It's basically based on 80% of the deposit rates of the three local banks or the major local banks and 20% of the savings rate of the local banks. Alright, so to make the numbers more realistic, I have actually gotten this table from CPF website, and this number you are seeing here is actually the latest number of the time period from August 2023 to October 2023. So I want to use this as an example so it's more relatable. Okay, so how is this CPF OA interest rate calculated? Okay, so basically CPF board will take the average of this major local bank's interest of the 12 months deposit rate. They will give it an 80% allocation. Okay, then they plus the average of the three major local banks' savings rate, and then they give it a 20% allocation. So if you take this average, add together, your average interest rate will be 0.6633. And you realize that through the different time period of August, September, and October, it is all the same. So which is why for this quarter, the average interest is actually 0.66. Alright? So the CPF OA interest is based on this 3 months average of major local bank interest or the floor rate of 2.5%, whichever is higher. Okay? So this is, I think most of us are familiar with this. Okay, so what is different in the past was that for special Medisave and retirement account, how that interest is calculated is actually based on the OA interest rate, and then CPF board actually gives an additional 1.5% interest. So based on earlier, we have calculated the 3-month average of major local bank interest is about 0.66%. Okay, so 0.66%. So but we realize here over here it says that the CPF OA interest is based on the 3-month average or the floor interest rate of 2.5%. Because the floor interest rate of 2.5% is higher, so the actual interest rate that was used to calculate ordinary account is actually based on 2.5%. All right. So then for special Medisave retirement account, how is it calculated? Okay, so if we have used like the 3-month average of the major local bank interest of 0.66%, and then we plus 1.5%, okay, so by right, our special Medisave and retirement account interest will only be 2.16%. Okay, so but because the floor rate is actually 2.5%, so your special Medisave and retirement account, after you take 2.5% plus 1.5%, okay, you actually get an effective interest rate of 4%. Okay, so again, it sounds very familiar, 2.5% and 4%, right? Okay, so but what has changed in year 2008 was this. Okay, so the way that interest rate was calculated has been changed by CPF in year 2008. Okay, so let's take a look. For CPF OA, okay, so it's pegged to the 3 months average of major local bank or 2.5% floor rate. Okay, so this one no change. For OA, no change, right? So what has changed is actually the way that the interest rate are calculated for your special Medisave and retirement account. It's no longer pegged to the OA interest rate. Instead, it's actually based on the 12-month average yield of a 10-year Singapore government securities, and CPF board give the extra 1% interest on top of that. Okay, so now coming back to these numbers, so how does it look like in actual numbers? Okay, so for a special and Medisave account, okay, and retirement account, they are both using the same computation or calculation of a 12-month average yield of 10-year SGS plus 1%. Okay, so again, to make the numbers more realistic, I've extracted these numbers. This 3.08% is actually based on the more recent numbers of our 10-year SGS recently, all right? So recently, the 10-year SGS yield has been about 3.08%, okay? So then CPF board give an additional 1% on top of that, right? So for retirement account, okay, so it is the same in this case. Okay, so but in the past, actually, not too long ago, just last year, actually the retirement account interest rate tends to be different from that of the special and Medisave account interest rate. That is because the time duration that CPF board used to calculate the interest are different. But notice from this footnote over here, right? From 1st January 2024 onwards, the retirement account interest rate peg will be aligned to that of the special and Medisave account. Okay, so this footnote you are seeing here is actually extracted from CPF website. Okay, so and it's computed quarterly instead of annually. Okay, so which is why in this example, you see over here, special and MediSave account and the retirement account, they are having the same interest rate of 4.08% after you take 3.08 plus 1%. Okay, so actually 4.08% is actually higher than that 4%, right? So, but just last year in June, this 10-year SGS yield was actually lesser than 3.08%. It was about 2.8%. Okay, so back then, okay, so basically just last year June, right? If the 10-year SGS yield was 2.8% and we plus 1%, how much does that give us? We are expecting interest of about 3.8%. But strange, right? We didn't hear about any news about interest rate of 3.8% for special MediSave and retirement account. Why is that so? It's mainly because when government were announcing the change in the way that special MediSave retirement account interest rate was being calculated, they know that people will be unhappy because we are so used to that 4% interest rate that CPF has been giving. So that is why when they announced this change in computation for the interest rate computation, they also announced two goodie bags. Right? So first goodie bag was that, regardless of the performance of the 10-year SGS, okay, your special MediSave and retirement account interest is guaranteed at 4%. Okay, so but there's something very important to take note over here, is that this guarantee of 4% is actually regularly reviewed. Okay, so in the past it's actually reviewed once every year. So is there a chance that this 4% guarantee might be taken away? I mean, it is possible, unlikely, but it is ultimately still possible. So this is goodie bag number one. So what was goodie bag number two? Okay, so goodie bag number two was that for a combined balance of 60,000 in your CPF account, up to a maximum of 20K in your ordinary account, you actually get an extra 1% interest. Okay, and this is a permanent feature until otherwise announced that this will be removed. Okay, so if that has not been announced, then this is actually a permanent feature. Okay, so this sounds, okay, a lot of information to digest. So let us try to understand this by looking at this illustration over here. Okay, so this is for someone that is before or below age 55. So assuming there is this person, in his OA he has 60K and in his SA he has 80K. So what was goodie bag number two? Let me just write a short note over here to remind us of what is this goodie bag number two. It's basically the first 60K of your CPF balances up to a maximum of 20K from OA, okay, will be getting a 1% additional interest. Okay, so in this case, this person has 60K in his ordinary account, but because there's a max 20K for OA, right? So we can split this 60K into the first 20,000, we'll be able to get a 2.5% floor interest rate plus an additional 1% interest rate, which is 3.5%. Okay, so the remaining 40K, you continue to earn that floor interest rate of 2.5%. So for special account, okay, so there is now 80,000 inside this special account that has not gotten the extra interest rate. Okay, so let's come back to this details of the goodie bag. Okay, so the first 60K of the max 20K can get extra interest. So of this 60K, okay, so this person has only utilized 20K from his OA. So if you take 60K minus 20K, so he still has 40K that is entitled to get an extra interest. So this balance of 80K, we can split it into 40K. Okay, so the first 40K, okay, will give you the 10-year SGS plus 1% yield or 4% interest rate, plus 1% that will give you 5% interest rate. Okay, so the remaining 40K will continue to give you that 10-year SGS yield plus 1% or 4% interest rate. Okay, so one thing to note over here is that this extra interest paid out on top of this ordinary account, where does it go to? Okay, so this 1% extra interest rate, right, it actually will go back to your special account. Okay, so why so? Remember that the primary purpose of CPF is to help us to have adequacy during our retirement. So that's why this 1% will be going back to our special account. And government probably knows our pattern. So Singaporeans, if we do have more money in our ordinary account, we probably will be buying another property or upgrading to a bigger property. So that's not what we want. So instead, the 1% is actually put it back into our special account to help boost our retirement. Okay, so let's use another illustration. Okay, example number 2. So in this case, this person only has 10K in his ordinary account, 30K in special account, and then 30K in MediSave account. Okay, so quick recap again. All right, first 60K. Okay, max 20K OA. Okay, plus 1%, right? Okay, so in this case, this person has 10K in his ordinary account. So this full 10K in his ordinary account will be able to get that additional 1% interest, or 3.5%. All right, so out of this 60K, he has only utilized 10K. All right, so he's still entitled to 50K that he can get the extra interest. So his special account has only 30K inside, so for this full 30K, he will be eligible to be able to get the extra 1% interest or 5%. Okay, so lastly, okay, so now of this 50K, you have used another 30K to get the extra interest. So now your balance is about 20K that you can get the extra interest. So of this MediSave 30K, we can further split it into the first 20K. You will be able to get that 4% interest plus 1% extra interest of 5%. Okay, the remaining 10K will just get that 10 years GSU or 4% interest. Okay, so previously I shared that the interest earned on ordinary account it goes to special account, right? So then what about the extra interest given on MediSave account? So this one over here, this 1% on the MediSave account, where does it go to? Does it go into SA as well? No, the answer is no. It actually stays in MA. So why so? Just now I've also shared that money inside your MediSave largely just stays in your MediSave. So in this case, the 1% interest will continue to stay in your MediSave account. Okay, so in 2016, okay, a third goodie bag was actually announced. Okay, so this time, this goodie bag was for people that were age 55 and above. Okay, so assuming that there is this person, okay, so he has about 100K in his RA. Okay, so of this 100K, the first 30,000, okay, will be able to get, of course, your usual 4% interest, okay? But in this case, right, for the first 30,000, instead of just getting 1% extra interest, your first 30,000 balance will be actually getting a 2% extra interest or 6% interest. All right, so the next 30K will also be able to get an extra 1% interest of 5%. Okay, and then the remaining will be based on the 10-year SGSU plus 1% or 4% interest rate. Okay? All right. So what does that mean for us? Okay, so CPF is actually one of the best investment tools out there that you can use to accumulate to save towards for your retirement. Okay, so but in order to use CPF, it's important that we understand what is the end goal that we have so that we can use CPF to save, to invest towards for our retirement. Okay, so why we think CPF is one of the best investment instruments out there is that if you compare the returns to the risk that you are taking, the returns are actually considered very high because the risk is almost risk-free, whereby your returns are guaranteed, your capital is guaranteed, and this is only possible because the sponsor behind this is actually our Singapore government. Okay. So while CPF is actually one of the best investment instruments or one of the better instruments out there that you can use, you have to accept that, or you have to expect that when you put money or when you top up into your CPF accounts, there will be no more liquidity. So basically money that you put into your CPF accounts, it'll be hard for you to take it out. Okay, so there will be also some policy risks as we have experienced recently. We know that time to time, CPF or the government might make some announcement to make changes to the CPF and how it's managed. And some of the time, it might not be within our expectations. Okay, so there is also a limit to how much you can actually contribute and top up to your CPF. So these are the things that we want to take note of. Okay, so if let's say you really like CPF and you want to use more to accumulate into your CPF accounts, there are 3 ways you can put more money or top up into your CPF. The first way is the retirement sum top-up scheme, RSTU. Okay, so this is basically for those before age 55, you are able to top up your special account up to a maximum or the cap of full retirement sum. So this year, the full retirement sum, as we know, is $205,800. Okay, so there are a couple of ways that we can put money into this retirement sum top-up scheme. So the first way is to transfer money from our ordinary account to our special account. Okay, so but when you do the transfer, just be very mindful, don't transfer everything because you might still want to leave some in your ordinary account just in case for emergencies. For some reason there is loss of income, at least the money inside your ordinary account can continue to pay for your mortgages. Okay, so just take note also that when you transfer money from ordinary account to special account, it is an irreversible move, meaning to say you won't be able to transfer it back to your ordinary account after you do the transfer. Okay, so another way that you can do this retirement sum top-up is you can also use cash. Okay, so and when you use cash to do a top-up, you actually enjoy tax relief of up to $16,000. So let's do a breakdown of what is this 16,000 that you can enjoy tax relief. So you can firstly do a $8,000 top up to your own special account. And when you do that, you are getting a $8,000 tax relief for this year. Okay, so basically that will be calculated next year. Okay, so the next $8,000 that you can get tax relief is when you were to contribute into your spouse, your spouses, your siblings, your parents, grandparents, or your grandparents, in-laws' CPF accounts. Okay, so when you do that, you'll be able to get 8,000 tax relief when you contribute to yourself, and another 8,000 if you have to contribute into the CPF accounts of your loved ones. But just do take note of something, is that when you top up into your spouse's or your siblings' account, their annual income must not be more than $8,000. So if the annual income is more than $8,000, then you will not be eligible for this $8,000 tax relief. Okay, so for people after age 55, you have the option to top up your RA to the enhanced retirement sum, which this year is currently at $308,000. All right, so that's the first way that of how you can accumulate towards your retirement fund. So let's take a look at the second way that you can do the contribution or topping up to your CPF accounts. Okay, the second way is called the CPF voluntary contribution. Okay, so when you do this, essentially when you put money through this voluntary contribution, it will be split into your ordinary account, your special account, and your MediSave account according to the allocation rates of your age band. Okay, so there's a maximum amount that you can top up every year. So the maximum amount that you can top up every year is $37,740. And this includes your working contributions. So for most of us, if let's say we are working, our employer will contribute CPF for us. So then whatever that the employer has contributed, or what we have contributed, or employer has contributed on our behalf, okay, so it will be minus away from that. So basically, if let's say you have a monthly income of $6,000 or more, or you have bonus of more than 5 months, more likely than not, you would have already maxed out this $37,740. Then this scheme is not open to you. Okay, so for this scheme, you are only able to do it using cash. You can't do the CPF OA transfer. And for any tax relief, it will only be for the self-employed. So the third way that you can contribute into your CPF is the voluntary housing refund. So for many of us, we have used our CPF OA money to purchase a property, pay for our mortgage. So for this amount that we have taken out from CPF to pay for our housing, we can also voluntarily choose to refund this OA amount that we've taken out back into our CPF OA account. So we can put this amount back, the amount that we've taken out, plus whatever accrued interest that we would have otherwise gained if we had left the money inside ordinary account. Okay, so we can put this total amount back into our CPF OA even before we were to sell off our property. All right?